The 2024 housing market, folks are asking, where's the money to help with down payment when the interest rates are so high? Another Hump Day Real Estate with Kendall in the DMV. I'm Marcellus Kendall. We're going to talk about that today. Man, who's the guest we have today?
Savage, Gil Williams. Fellas, man, I'm so glad to be here.
Hey, man, I appreciate you for jumping on, man. We're going to discuss today. We're going to get into this crazy housing market. And tell me, Frank, tell us a little bit about yourself.
Well, I've been in the mortgage business for 28 years. It was a family-owned business. My father was a mortgage broker. And, growing up around the house, I just kind of fell into it. And we do insurance and mortgages. And I think around 1996, my father gave me a loan application, a 1003. He said, you're going to start doing mortgage loans. But I didn't want to at first. I only wanted to do insurance, but he said, learn how to do mortgages. He said, because he felt like that was the future. And I did it, and I found love with it. And like I was saying before we went on air, I've worked in so many different markets. The industry has changed so much. And so it's always a challenge, no matter how long you've been doing this. Every day you're learning something new.
So that's most definitely a thing. Well, for me, only been in haven't been in as long as you. I came in during the crazy time, 2011, right after the housing crash. So it was a very, very tough market. Crazy because not only did we just come out of that recession, but we also the inventory just stayed stuck.
Right.
And there wasn't enough inventory to satisfy even when the buyers finally did come into the market.
Right.
And so that just made things crazy. And it's so crazy that the inventory still is stuck now. And part of that reason is that folks from around that 2008 and or so time frame are still sitting on 3-4% interest rates. And although they have a need to sell, they don't want to sell because they don't want to lose that rate. What are you seeing out there when you're working with your buyers?
Well, the thing about people that is interesting, the rates are the rates. But what I found dealing with people is that if a person really wants to buy a house, they want a house. The point is just trying to find something that is affordable, because it gets in the person's mind. And I talk about this when I do my home buying seminars. When a person is renting, it's something that ticks them off to be like, I'm ready to buy. It could be the neighbor. It could be a rent increase. It could be out of jealousy because their girlfriend bought a house, something. So it's in a person's mind when they really want to buy the house, but the point is just trying to find something that's affordable. That's where the interest rates, the payments, all that come in. But, it's always the American dream to purchase a house. It's just the obstacles that we go to get them there.
Oh, the biggest thing that I try to educate on that what you just spoke on is the first thing is why are you not a landlord? And if you paid your money to a landlord and you thought about the fact that most landlords, when you have them, have multiple properties, and
Right.
so why do those folks want to take the time and go and get a loan and put a percentage of money down to end up owning these houses just to rent them out to you? And so that's my question,
Right.
to the people is like, hey, think about it. Why is this person willing to do that? And there's a reason. There's wealth building
Right.
in that. There's tax shelters in that. I'm not a financial advisor, but it's those things are included in when you get into that arena of being a landlord. So those are the things that I think, outside of some of the things you mentioned, when the landlord doesn't come and fix the leaky faucet on timely, and you pay your rent every month.
Right.
Those are reasons that you should be raising your hand and say, hey, I got to take control of my own destiny.
Right. Absolutely. And it's just something, a lot of people don't have that confidence to realize they can be a homeowner. And that's unfortunate. I think 50% of the battle is for that person to believe I should be a homeowner. I am entitled to be a homeowner. And I think once a person has that mindset that they are entitled to be a homeowner, and everything else kind of fills in, get the credit right, the income and all of that. But a lot of it is just the mindset, the confidence. And knowing you for a long time, Marcellus, I must commend you. I know I'm on your show and everything, but one thing that you do with your customers is that you give them that confidence that they can be a homeowner. That they are worthy and they are entitled to that American dream. And that's why I think you do so well.
I appreciate that. I just heavily believe in that, man. At the age of 21, I purchased my home, 1997, you know, and none of the people around me had owned a home at that time, So, I had a buddy of
What made
mine
you
who,
different? What
what
what,
ma-
what made you different?
information that I received. I did a video not too long ago talking about some of the inspiration I had that got me into real estate. What made me different is that when you have people around you that can give you the right information, is that the thing that people get wrong is everybody wants to make money. How do you build wealth? And that's an information I got early. And so it's not so and coming from lower income Black community hood or whatever you want to call it, everybody wants to get to the money, but nobody understands how to get to wealth. And that's what was instilled in me, was the fact that go get the money, then take the money and put it into a vehicle that's going to help you build wealth.
Right.
And so yeah, and that's the beauty, man. And I was lucky, man, to actually have that. I had like I said, I did a video. Pop Red, rest in peace, who passed away with this year, last year. And that guy instilled in the and people and in the neighborhood, and all he talked about was real estate. And he actually was mad with me when I purchased my house in '97 because I bought a foreclosure. He wanted me to buy a tax lien sale. And so that if it was a tax lien sale, the beauty of what if you were able to go through the whole process and get a house that way, would have been almost 40% off or something.
Right.
So
Yeah.
that's what he instilled in me, along with teaching us how to hang sheetrock and do a lot of different of the trade works in the homes as well. And then it came up to years later when my dad had saw or heard some things that that people telling him what I'm doing. And one of the this is the best thing, and I try to do this with young folks when I talk to them. A lot of times, people want to they want to bash you about whatever you're doing, right? If you're in entrepreneurship, if you're in the street, or you're doing things that folks don't understand, and you could be doing good at that stuff, but if they want to get you away from it, they have to educate you the proper way to get you away from it. And it's not always to bash you, it's to give you some information to say, okay, if you do this, why don't you take that and put this over here so that you can build something for later on, right? Instead of being like most people who go and get in trouble, they just go and get incarcerated, or they end up 6 feet deep. But at the end of that road, they have nothing.
That's right. Yeah, that's what's up, man. I think, um, you don't even remember this, years ago when I met you. You used to call all the time and just talk about different things in real estate and so forth. But the one thing you talked about that you mentioned was growth. You always mention, growth. We have to, as a race, understand real estate more. And I remember you called me. You said, Frank, I got this guy who wants to be, wants to learn about being a loan officer. And I said, oh man, I said to myself, we're not hiring. I said corporate, man, they want people that are already producing. And I said, and then you let me. I think I was having a bad day. You let me say everything I had to say, and you just said, Frank, I didn't ask you that. I said he wants to learn about the mortgage business, and I realized what you said. I said, man, bring him in. I bring him in, and that's when I realized that you were different in that aspect, man. That you were about growth. So my conversations with you have always been very deep, but you provide growth in the vehicle of real estate. And we need more people like you in the industry. And man, so I'm honored to be here, man. Anything, like I said, lending, been there, done that, seen it all. I can't predict the future. No one can. But you know, um, it's always a way to purchase a house. And purchasing a house is important because you said the tax write-off is important, generational wealth, and just and pride, knowing that your kids will see you buy a house and they will buy a house because their parents bought a house. And the thing about it is that when the kids do it, it's not even going to be a big deal to them because they are expected to do it because their parents did it. And I think that's the biggest compliment because when a first generation person does it, they're like, wow, we're the first. But when the kids do it, they're like, I'm supposed to do it. And so really that's a compliment because you instilled in them that they are worthy to do that.
And it's so crazy um, that this is not a new opportunity. I mean,
Right.
my great grandfather, I think, had their home in the Baltimore City area for since 1926 or something.
Mm.
Three-story row home. You know what I'm saying? That one of the my late grandmother companion she had paid his house off in 1926.
Yeah, that's what's up.
So I think it was somewhere around it. But just think about the fact that we think that there's a struggle, but folks before us, they struggled worse than we did, but they did
Right.
some of the things that we won't even look at. Now, the problem that we have is we keep comparing the price that they had, but we got to go back and understand the pay rate that they were getting paid is just like where we are today, right? It's
Right.
just the numbers don't look this, don't make sense to us. But we have to understand that 75% of the hour and $26,000 to buy a house was a lot back then.
Absolutely. Absolutely. When I first started, Emerson Village was like 75, 80,000, to buy on Wildwood Parkway, per se. Of course it's a lot more now, so real estate does appreciate, it goes up. It goes up. And as far as the lending, the price of homes go up. So what happens, you see these different products that come out because that's the lender trying to keep up with the growth of the price of the home. That's when the incentives, the down payment assistance, and all that comes in, just trying to keep up with the growth of the prices of homes.
Yep. And so what it and when you talk about that, what normally happens also when the interest rates are up though?
Well, when the interest rates are up, it just the biggest thing I find with higher interest rates is when a person wants to buy a home, okay, say it's 400,000 or whatever, the price is higher than when their friend bought the $400,000 house 5 years ago. I hear that a lot because 400,000. Okay, let's say it was 2,800 or whatever it is. At that time, the same type of house in a community. So the girlfriend wants to buy the same type of house in that development. Instead of 28, it's 31 now.
Mhm.
And the biggest thing you hear is that, wait a minute, when my girl bought the house, it was only 2,800. Now it's 3,600. And then you'll say, well, how long has she been living in our house? 7 years,
Right.
and I'm like, yeah, well, the prices have gone. So, the mindset, you got to let them know up front, or they have to mentally be prepared that, a house at a certain price point is going to cost a certain amount of money. That's because of the interest rates.
Mhm.
That's the interest rate. So the interest rate is not really a problem if the person can get the house they want at an affordable price. Because to a consumer, the rate is just a number. The rate. What it comes down to is that mortgage payment. So the key to a superstar realtor like yourself is that you have to, once they get the pre-approval, you have to put them in a house that they like, at a house that they qualify for. And I think that's the trick. The lender can come back and talk about refinancing and all of that, but it's the realtor that has to do the magic to let that person know that if you want 400,000, that's 3,800 or whatever it is. You can't do that right now. But this house right here at this price is lower, but it can still be your dream home. So that's where the rates come in.
So let's talk about the people who are on the fence because of the rates, why they need to buy a house now. Because if they wait till the rates go down, I know you believe what I believe. You tell me what happens when the rates go down and everybody wants to jump into the market all of a sudden.
Yeah, well, see, that's when the prices of the home go up. You understand? So it's a never-ending cycle. You can't sit around and say, I'm gonna wait for the rates to go down before I buy a house, because you don't know when the rates are gonna go down. All you know is that at this point in time that you qualify for a house, get what you can afford. Get what you can afford. Is like I said, it's not really about the interest rate, it's about the monthly payment. Get a house that you can afford at the monthly payment, okay, and like that situation. And then when things loosen up, because when the rates drop, like you just asked me, the prices of the homes are going to go up because the demand is going to increase, right? So either way, you're going to pay a higher price or a higher rate. But this has been an issue for years, because even when the rates were stupid low, the prices were outrageous. And the demand, I mean, you're trying to get a person into a house, you got 50 people bidding on that one house. So that house that was listed for 400,000 is going to sell for 450.
So Frank, let me give the folks the scoop on that. And this is what I like to
Right.
educate when we start talking about that, is that you have to stop chasing after the ugly house. Now, I talked a little before about being a landlord, right? And becoming like your landlord. Well, 9 times out of 10, when your landlord purchased that property, it was ugly. And
Yeah.
he went in and took sweat equity, etc., to get that property up to standards to be able to rent it to you. I need you folks to get in your mind that we're in the biggest wealth transfer with the baby boomers and the silent generation in history. And those folks that know majority, those folks that know updates to their homes. Some of the inventory that's on the market that people are stating that there's no inventory is that silent and baby boomer generation inventory. Do
Right.
not let the investors beat you out and get in something that you can buy and make it look like what you want. Because some of you are going out here and buying properties and, oh, I fell in love with it. And then you go in there and got to paint the thing over because you don't like the color. So you're over leveraged now because you had to bid 20, 30,000 over to
Right.
get the property. And now you got to spend $10, $20,000 going in the door to make the property a home for you. What you say about that, Frank?
No, you know what? I agree with you. But what I do sense is that us as a race, we are a lot more intelligent when it comes to real estate. And we ask more questions. Like these younger people coming up now, they're like, okay, can I get a house and fix it up? They think more out the box than I think our generation did. And they are willing to take more chances because they realize the importance of real estate. And like I said, the whole thing with interest rates, you know, that, the rates are the rates. That's how I see it. The rates are the rates. The news gets a hold of interest rates, and I think they kind of exaggerate them a little bit, because there's something people are gonna read. You turn the computer on every morning, they talk about the rates because that's what people are gonna look at. But if you want a house, you want a house. And like I said, it's always just about the payment, not necessarily the rate. But yeah, but what you're saying is correct. But I see us as a race being a little bit more educated, and that's because of people like you, beating in their head the importance of ownership. And that's just, it's just fascinating. We can talk all day about that.
Yeah, yeah, yeah. And so one of the things to get these folks off the fence, you guys have some programs to help with down payment and some other things, right?
Absolutely. We I know myself, I made a commitment about 10 years ago to be heavily involved with down payment assistance. And the reason being is that before then, I always had people that wanted to buy homes. But the problem was, it wasn't that they didn't qualify, they didn't have the money to pay the closing costs to get into the house. And that was very frustrating. My office was in a real estate office. And so I was around real estate agents all the time. And they used to come to my office and just voice their frustration about having people that want to buy houses, but they didn't have the money. So I really started investing my time and money into banks that I deal with. They give down payment assistance. Down payment assistance gives people money for closing costs to get into the house.
And so you guys have a couple of different programs. Tell us about those.
Yeah, we have a zero down. Okay, so if a person's buying a government loan, which most people do, most people, especially the first time home buyers, are going to get a FHA loan. A FHA loan is you only putting down 3.5%, and it's government protected. So it's better buy. It's cheaper. Okay, so with our program, we pay the down payment. We pay the down payment, and we pay a lot of the closing costs. So like if it's $10,000 to get into a house, by the time we put our discount, well, I don't want to say discount, our down payment assistance and fees, you can walk in only paying like maybe 5,000. So what we've been able to do is cut the closing costs in half, and that allows us to do a lot of volume. That allows us to create a lot of home ownership.
Got you. Now we were briefly, and this probably have you on the side a little bit, but we were briefly speaking on the National Association of Realtors and Buyers Agency Commission and all of that stuff.
Right.
I think one of the things that and some people are talking about it, but it's getting closer to that time because August 17th is when the changes will have to be made in the MLS and all of that stuff, where listing agents can't put the commission rate if there is any commission, or there isn't any commission to help pay the buyer's agent. One of the biggest questions is, especially in the low to moderate income communities, is where are these people going to get the additional 2.5–3% commission from, if need be able to pay their realtor? And nobody's been able to answer that question for me. Do you have any info on that from where you sit?
Yeah. Now keep in mind is that what they're doing August 17th has never been done before, right? So everyone is going into it, blindfolded. But I feel confident with us. I mean, we're giving 5% down payment assistance. That's a lot. So we help that battle, and I'm looking forward to it because, like I said, everyone deserves down payment assistance. If we can give 5%, and they can come up with a couple of dollars more, okay, we can make it happen. Plus, I feel like in my heart that a lot of these sellers will give seller help. will give seller help. You'll see an increase in seller help because no one wants to lose a deal. So for people that don't know, seller help is when you buy a house and the seller gives money to a closing. Now the commission thing is separate, but they can take money away from the sales price. So I think between that and our down payment assistance, I think that will be very competitive.
Well, and I hear a lot of folks thinking to solve the issue would be to raise the price, but we already kind of played with that for years in order to get some of that closing seller help back from the seller. My concern with raising the price is the appraisal, and then if it doesn't appraise,
Yeah.
then what happens?
Well, let me say this. You don't have to raise the sales price to give seller help. And I think that's what's going to come down to. A person can give seller help. If you put a house on the market for 300, you don't have to raise the price 320 or 325, whatever, to give a person back money because it might not appraise at that, like you said. But you can give seller help on the base price of the house. It's just that the seller will make less, but they still sell the house. You
That's
know, you know
that's
what I'm
where the
saying?
problem comes in that because now you got the seller who's like, hey, well, should I just wait around in front to get somebody who I can make $5,000 more on rather than having to give it back to you, especially if you don't want to raise the price so I can make sure I get because that's the thing that they're betting on. And that's what
Right.
I believe DOJ is fighting the National Association of Realtors in regards is that the seller is maybe making less money because he or she has to, maybe put some seller concession and pay for that buyer's agent commission.
Well, right. See, it's going to be one or the other. As a seller, when you go to settlement, the word settle means everyone is happy. So that means it has to be a fair situation for the buyer and the seller. So if you're selling a house and you don't want to pay the buyer's commission, that's 3% that you save. Okay. But to make the deal work, that buyer might need $10,000. That $10,000 is a little less than if you give them the 3% as far as paying the buyer. So at a certain point, it has to give. The seller can't sell a house and necessarily get everything they want. When they have a buyer that's ready to go. You understand? So at a certain point, the negotiations have to occur. And I'm not talking about what the house is going to appraise for. We're talking about money to get in the house. You either pay the 3% or help the seller the other way. And then you got the lender that's putting money in also. So I think the negotiations on these deals will be a lot stronger than they were before.
And my quick opinion on that would those negotiations will probably even be a lot stronger, maybe in my opinion, in the lower to moderate income communities. But
Right.
those upper communities where folks have the cash who were already putting during COVID, were putting 50 to $100,000 cash over. That's going to be a whole nother ball game. So if somebody's trying to move up and they remembered what they did and the neighborhood where they purchased maybe the townhouse, etc. And then they go up into let's stay in Maryland for a minute. They go from Emerson Village to now they got married and they want to move out to Howard County. But that's a whole nother ball game. And I've been out there fighting for buyers, and
Yeah, that's
yeah,
true.
they 50, $100,000 over. So when you come back and you can't even pay your buyer's agent commission, you get wiped out. And so that's the scary thing about this whole thing that's
Okay,
coming.
may I ask you a question?
Yes,
Okay,
sir.
I'm looking at that scenario. Okay, they're on Emerson Village. They want to move to, let's say, the Elegant City, right down on 40. Boom, straight shot. Okay, but they're selling that house on Wildwood, right? Because most for you're not gonna see too many first time home buyers in Elegant City. Okay, so let's just say they're selling their house. They're taking the money from their house and rolling it in. So at that point, paying the seller, the buyer's agent, would not be that much of a
Yeah, that
situation because it's depending on how much they're selling
yeah,
their
that
house
could
for.
that could be a little different.
Right,
Maybe I should have used a rental for
right,
that
right,
example, coming from
right. It's
rental and going out. Or the
right.
fact that maybe they just bought 2 or 3 years ago and they don't have the equity, but their
Okay.
life situation changed and they want to go out too.
Right.
And
Better
then
school
yeah,
systems.
yeah, and then they
Um,
remembering how the transaction went in the
right.
city, but it's not going to be that way when you go out
Well,
to
yeah,
a
well, that's true. That's true.
yeah.
Well, that's true. And that's what I'm saying. Every situation is different. And that person that's selling the house, it depends on why they're selling the house. If it's an estate sale or a divorce where they have to sell, it's more negotiable. But so I think that's what I'm saying. Every transaction is going to be a heavy negotiation between the two agents, like we've never seen before. But that down payment assistance, because we still give it to people, even if they're not first time home buyers. Our down payment assistance we can always give. And I think that's going to be the key in a lot of situations.
There any income requirements? Can somebody at buying a $500,000 house get down payment assistance with you guys?
Absolutely. Our down payment assistance is based on county. Generally, they can't make any more than 200,000.
And that's the whole family situation, or
Right. Whoever's on the application,
gotcha.
whoever's on, and that's another thing. On some of these like city and county grants they give, what they do is that they look at everyone in the house's income, and that's how it gets reduced down. Like you think you're getting 15, but if you got 4 people living in a house, by the time they calculate that, you're only getting 5. But with us, we go by whoever is on the application, regardless of who lives in the house.
Gotcha.
Right.
And so we're almost coming to a close. Got anything else that you want to share?
Um, no, just well, first of all, I'm happy to be here, right? And just want people to understand that buying a home is the American dream, and what people like Marcellus and myself try to do is just to let you know that you are worthy. If you work hard, you can have what anyone else has, and don't ever feel like that you're not worthy for home ownership. It's just a point of sitting down, planning, getting a budget together. But it can be done if you can pay rent, and rent goes up every year, right? You can be a homeowner.
Yes, sir. Yes, sir. So tell the people how they can reach you, man.
Oh, my phone number is 410-458-1504. 410-458-1504. And my hours of operation is that I have no hours of operation. You call me, text me anytime, except on Sundays between 9 and 11. I'm in church, right? So just give me my 2 hours. But text me and I'll call you back. And and let's live that American dream. I wouldn't have gotten where I've gotten in life if I didn't believe in myself, have faith in God, and just knew that I was worthy.
Yes, sir. Yes, sir.
Yeah,
Frank, once again, I appreciate you
no
for
problem.
taking the time out and jumping on and giving a wealth of knowledge. And for the
Yes,
folks out there, we're here to help you guys this year and beyond. So in the description, there's more information for you guys. If you didn't, well, you can always replay the video and go in the description and get the information if you just need to go directly in. And Frank, again, I appreciate you. And
thank you,
another
Marcellus.
Yes, sir. Another Hump Day Real Estate with Kendall and the
My
DMV. We
man. All
signing
right,
off.
thumbs up, baby.
Yes, sir.
All right, good night.
Have a blessed one.